Hey now, in June 1943, Hungarian economist Nicolas Darvas forged an exit visa to escape the horrors of World War II. He then became a world-famous dancer, but in his free time relentlessly studied the stock market. His research produced the Darvas Box trading method and his 1960 authorship of How I Made $2 Million in the Stock Market. The book release prompted a criminal investigation by the New York State Attorney General into claims made by Darvas. Does this system work? Did Darvas really make $2 million? And how would today's trader best implement this strategy? I am going to answer all of those questions and more. So just sit back, relax, and swing into that subscribe button. I call this system dancing on the box. And like most trading systems, it can be applied to Forex, crypto, options, stocks, indices, or any instrument that has significant volume and market participants. This trading strategy uses two free TradingView indicators. As always, links and settings to all indicators are listed in the description. The first indicator is the MavilimW. I am going to keep inputs at default and color both the 0 and 1 lines in blue. The MavilimW is a Fibonacci-weighted moving average that attempts to identify areas of support and resistance. This study will be used for trend direction confirmation. The second free TradingView indicator is the Darvas Box. Inputs and style will be kept at default. The Darvas Box works by drawing lines on the upper and lower levels of previous market action. It works and appears in a similar way as Donchain channels. In this system, the Darvas Box will provide the triggers for entry. Let's go over entry criteria and review some examples. As always, system rules and details are listed in the description below. This chart is Bitcoin versus the Euro 1-hour candles. The rules to enter along for dancing on the box are: first, price must be above the MavilimW line in blue. Second, a candle needs to close above the upper Darvas Box in green. All of that happens on this candle here. That is our trigger candle. We place the stop at the lower Darvas Box and target 1-to-1 for half of the position and 1-to-2 for the second portion. When target 1 is hit, move the stop to break even and target 1-to-2 for the second half. And this one almost stops out at break even, but does hit target 2. If you enjoy this content, make sure to click that like button. I have one more long example. Price is above the MavilimW indicator. Then we can see that price has closed above the upper Darvas Box. Everything converges on this candle and it serves as our trigger. The stop is placed at the lower Darvas Box line and target 1 is 1-to-1. Target 2 is 1-to-2. When target 1 is hit, move the stop to break even and target 1-to-2 for the second half. And the second half of this one stops out at break even before being able to hit the second target. Now we flip to shorts. This is what I will test for shorts. First, price is below the MavilimW line in blue. Second, a candle needs to close below the lower Darvas Box in red. All of that happens on this candle here. That is our trigger candle. The stop is placed at the upper Darvas Box in green and targets are 1-to-1 for 50% of the total position and 1-to-2 for the second half. When target 1 is hit, move the stop to break even and target 1-to-2 for the second half. And the second half of this one stops out at break even. I'm going to show you one more quick short example. We can see price is below the MavilimW study. Next, price closes below the lower Darvas line. This is our trigger candle. The stop is placed at the upper Darvas line and the position is broken into two equal parts with targets at 1-to-1 and 1-to-2. When target 1 is hit, move the stop to break even and target 1-to-2 for the second half. And this one hits the second target. I am going to give you some great ideas on how we can make this system better along with a trader's landing score. And now it's time to do what I do. If you enjoy this content, hit that like button. Remember, this is just 100 tests on one instrument. If you are thinking of using the system, please do all the required testing and be sure to let our community know what you discover. This test was done on Bitcoin versus the Euro 1-hour candles. It took a fast 3.5 months to find the 100 trades. 51 hit target 1, and of those 51, 39 hit the 1 to 2 target. This dataset provided for a tepid 1.32 profit factor, accompanied by a 51% win rate, and risking 2% per trade. The gain on the account was 31%. But I am going to give you 6 optimization tips to really get this strategy supercharged. The equity curve here is intriguing. There is an impulsive move up for half of the test, and this is followed by an extended consolidation. When I overlay the 1-hour trades on the daily chart, you can see there are 2 big motive moves followed by this consolidation. This strategy is very dependent on market conditions. More on that shortly. What score would you give this strategy? Let me know in the comments below. I give this system a Trader's Landing score of 6. Because while this test does indicate potential to be a profitable strategy, and the rules are clear and simple, this system is very much dependent on market trends. Remember, the enemy of great is good. I have 6 ideas on how we can improve this system. As earlier stated, this system is very dependent on strong trends. On this chart, you can see a slew of losing setups. One way to confirm the trend is to place the daily stochastic on the hour chart and only take setups when the stochastic crosses. A daily cross can be very significant on the lower time frames. Second, like I tested in this video using the Wada-Atar explosion volume indicator, you can see that this volume bar that crosses both the explosion and deadline confirms this signal for a huge move. The next idea is generally true for trend following systems. Looking at the results, you can see that 76% of the winning trades went on to hit target 2. This is a strong indication the lower target is not ideal. You could try testing moving the stop to break even at 1-to-1 in an attempt to keep the winning percentage around 50. But having your 2 profit targets at 1-to-2 and 1-to-3, I suspect the overall gain on account would be greatly increased. And speaking of gains, did Nick Darvas make all that money? Well, the investigation never went anywhere. But if we look at the Lori-led chart from 1958 and see the parabolic nature of this instrument Darvas is trading, it is certainly possible. Does this chart look familiar to you? Fifth, using a double confirmation is a great way to get into this trend following system. On this daily chart, there is a signal followed by a signal on the 1-hour chart. Using the 1 hour as the execution time frame, you get the benefits of the high time frame confirmation, closer stops, and less time in the trade. Furthermore, looking for additional confluence is especially helpful on systems that give off tons of signals like this one. Here we can see a bounce off the support from the previous Darvas box along with a wick rejection on the MavilimW. This is followed by a very impulsive move. When testing trading strategies that produce many signals, adding additional filters can yield better results. Check out this playlist for more profitable systems, and have a great day because you deserve it.